this bitch. Okay, cool. So yeah, I'm just gonna go over the trades that I took today, and I'm gonna go over the trades that we missed on GU and all that other stuff on Monday. So today was just a simple gold buy. So the first gold buy that I did was, I believe, somewhere around here. So I'm just gonna show you guys why I did that, because if you were to zoom out on your chart, right, on the daily time frame, so you can clearly see that we have bullish structure. Why do I say that? I'm only looking at the most recent levels of structure. Yeah, bro, it's recording. I'm only looking at the most recent levels of structure that have been broken. So let's say the chart was right here, right? And I'm seeing all of this bearish structure, and I'm thinking I want to go short, which makes sense because we have a break of bearish structure to the downside. But chill, because we have a break of bearish structure to the downside, but we don't have a break to the upside. Oh my lord, bro, Felix. Okay, so we have a break of structure to the downside, but we don't have a break of structure to the upside. So it will make sense for us to start bearing. But when I look at it from a higher time frame perspective, now this is where your higher time frames come in, because if I were to just look at this here, I'm seeing that this did not get broken, and I'm saying, okay, we have bearish structure, so I'm trying to sell. But what about all of this bullish structure that got broken on the left, right? So that's when, how do you know that this gets broken like easily like that? Two ways you can do that is, one, you head over to a higher time frame like the weekly. So if I were to show you guys the weekly, right, which would be bearish structure, it would be this one here. Yeah, what's good, man? Give me a second. Say it slowly. Hey, Patio, what's up? Okay. Okay, I'll go slowly. It's just because we have 40 minutes. I'm just trying to like get everything in, but I can start a new session anytime. So if I go to the weekly, I'm seeing this, okay? I'm just going to look at price right now. I'm seeing this bearish structure. It makes sense for me to short here. Price breaks above with a candle's body, not the wick. I don't care about this. This wick here doesn't tell me anything about price hitting upwards. This wick is telling me there's indecision. And then I want to wait for a wick, or excuse me, wait for a candle where the body closes above this structure. You guys know that. I said that in the second Zoom session. Okay, and once I get that body close, I know immediately that number one, weekly is in bullish structure. Okay, so now that weekly is in bullish structure, I'm going to look for pullbacks. Either I could even have a pullback down here, down to this bullish engulfing. I don't know. The truth is, I don't know. Nobody knows, right? But what I like to do is I always just focus on the order blocks, okay? So I focus on the order blocks here. There has to be some order block here. So I'm going to go down to the daily, and we're going to go step by step, okay? So I know that once price broke up to the upside, price came back. I want to get price when it comes back down. So I can see that there's an order block on the daily here. Okay, and price never reaches it. But this is the beauty about order blocks. Order blocks are there everywhere, bro. So for example, I'll give you an example, right? This is an order block right here.
I have a question.
This is a bullish order block right here. So when price comes back inside this, why do I want to look for buys? One, because I saw on the weekly time frame, we had bearish structure that had been broken. That's number one. Number two, I go to the daily, I see a bullish engulfing, which is, you know, a bullish order block, right? And another thing I see, which is just to add more reason to a buy, add more confluence, I see this bearish engulfing failed. What do I mean by failed? I mean that when price came back to, because this is your bearish order block, right? For your bearish engulfing. When price came inside here, okay, it never rejected and went lower. No, you see what you see? It had a candle close like inside halfway here. How a good rejection would be like this. Price just comes in, and of course I want to look for lower time frames, lower time frame bullish QM, and then it flies up. Okay, so another reason why do I not want to short at this bearish engulfing? Another reason, simple. When we went to the weekly, we saw on the weekly we had bullish structure. Okay, so now that we have bullish structure, all I am looking for, simple, buys, and more buys. That's it. I don't care about anything on the left, any resistance on the left. No, I'm looking at structure right here and right now. Okay, so I'm gonna go back to the daily real quick. And again, as I told you, I don't know whether price is going to play from this bullish order block or this bullish order block. So what am I gonna do? I'm just going to draw both, because all I need to do, I'm not entering. When price comes inside here, I'm not placing a buy, right? I want to wait for price to come inside and have a bullish QM and confirm.
I got a question.
Yeah, bro, what's up?
This is all liquidity because the price no touch about no touch on low slowly.
Oh, you want me to talk slower?
I think that can shit.
Sorry, do you want me to talk slower, bro? I can't hear you. Sorry, man.
That can low right here because don't touch the liquidity here.
Oh, yeah. You mean liquidity? Why didn't price come to test liquidity?
Yeah, because here we have liquidity pool.
True. 100% true.
Liquidity ball.
Okay, 100% true. But
so I think that can low right here.
Okay.
A C.
Okay, price can come here and do that, right? Yes, you're right. You're right. Price can come here and do that. But what I want to focus on are these order blocks, and I want to see the reaction coming from them. Oh man, this dude always has his freaking mic. Okay. I want to see the reaction coming out of the order block. Right now, I'm not saying don't care about the liquidity. I'm not saying I don't care about the liquidity. I'm just saying that I want to focus on the order blocks, and that's it. So when price comes inside here, it makes, okay, let me break it down. How would I have taken this buy? Okay. So price comes inside here. I'm focusing in here. This is the daily. I'm going to go down to the 4-hour and refine my order block. Okay. So what's the order block on the 4-hour? Daily, this shows bullish engulfing. Okay, sure. But what do I see on the 4-hour? I see this big bullish order block. This is not an engulfing. This is a bullish order block, right? It's the last bearish candle before price flies away. Okay. Now when price comes inside, I can choose. Okay. If I want to refine H4 some more, I think H4 is too big. Okay. I'm going to go down to H1 maybe. What do I see on H1? I'm going to refine. I like this right here. Last bearish candle before the push up. And I refine it to that. What did you say? Your mic is muted. Yeah, your mic is muted, bro, right now. Okay. So I've refined. So far, what have I done? All I've done is I go to my daily. Okay. So I'm not even talking about liquidity or anything yet, okay? So I go to my daily. I see bullish engulfing. I'm not going to enter because of daily. I go to H4, okay? H4, what do I see? I marked out like this. Last bearish candle before the push up. Okay, I'm still not happy. Maybe I want to see if I can find something on the lower time frame so that I can have some less risk, right? So I'm going to H1 and I see, okay, perfect. I have a bullish engulfing on H1. Even though price has already traded in there, I don't care. How do I know that when price comes back here, price is not going to push up again? I don't know that. So I'm going to mark it, right? And now what happens when price comes inside? Patio, see, look at this. This is on H1, by the way. You have this liquidity here that gets stop run. There's a stop run of this, and it shows a sign of strength. Okay. Now guess where I'm going to have my buy zone. This is on H1. I usually take my entries M5, okay? Where would I have my buy zone? So price has stop hunted all of these lows, proven strong, right? How do I know it's proven strong? Because bullish BMS, okay, proven strong. All I'm looking for is for the last bearish candle before the push up. That's it. So roughly here. Roughly. Look, I'm not cheating or anything, okay? This is at the wick. This is at the wick right there. So when price pulls back, I'm going to have my buy here. And look, even though there's equal lows, right? For me, I don't care about liquidity when the market structure, okay, for example, if market structure is bullish, okay, and I have an order block, the only liquidity I care for is for the liquidity that gets stop run into my bullish order block. If over here I have equal lows form or something while I'm trading it, that doesn't bother me because my stop loss is at a safe location. So how will I trade this? Again, I'm going back to how I would trade this. I wouldn't take a buy from H1. I would rather look for M5 or something like that. Okay, now price is very far away. So let me just get M15 maybe. Okay. Beautiful. Take a look at this. Isn't this your QM setup? TradingView doesn't want to show this area, but isn't this I'll show you on M30 later. Okay, isn't this your QM setup? You have this SH, which is your stop hunt, right? This is your structure. Okay, no, first of all, this is lower time frame, right? So you have your SH down here. Now remember, this is the type 2 QM I was talking about. You have one QM, which is stop hunt, BMS, RTO, which is return to order block, right? But you have a different type of QM. You have to be flexible with it, okay? So this is the second type of QM, which is SH, stop hunt, SMS, shift of market structure, and then BMS, and then RTO. Let me break it down, okay? So this is the pattern I'm looking for. I'm looking for 1, 2, and then I want to see this get stop hunted, okay? stop hunted. Now, I want to look for this to have a bullish BMS, but it doesn't happen. It comes here, it fails, okay? And it comes back here. Now I'm going to focus here on this structure. No more this. This is my shift of market structure. I'm not going to focus on this anymore. I'm going to 100% have my focus here. So once I see price break this, that I know is now my SMS. So now what am I focused on? I'm focused on what is the bullish order block inside here that caused this breakout structure, whatever this bullish order block here is, okay? So now using this is a bullish QM, but it's the type 2, which means it has SMS. Typically, you want to see like this, okay? Typically, you want to see it like this. You want to see break above, come back down, and all of that. Okay, but this is the type 2. So using this information, right, can you see we have a stop hunt? So now my eyes are focusing here, but then it comes up and it fails. You see it comes up, it fails down, right? But it never took the stop hunt of this. It never took that. Okay, it fails, it comes down. Now where are my eyes looking at? I'm looking here. I'm looking here. So I'm going to get my horizontal line out just like that. And I'm waiting for a break here. See, I get my break. Now I want to buy at the last bearish candlestick that caused the break. You have two options. This would be a very safe place to buy. You could buy over here, or you could buy at the last bearish candlestick before the break. So you could have your buy like this. Okay, let me go to your questions, man. I have to go. See you later. Okay, bro. See you, man. See you, man. All right. So this is where I will buy from. Which could, why? Because this is the last bearish candle before the break of structure here. Simple as that. That's literally all it is. Now, I didn't take this trade, so I'm going to go over the trades that I did take. Okay, so this week, what are the trades I took? FEG above the last. Oh shit, man! I just exited the entire chart. Fuck, my bad, bud. But I'm sure you'll catch some more over here. Okay, but let me tell you why I placed my buys, the buys that I did place on XAU USD, and why I didn't go for sells. Okay, why me? If I wanted to trade this chart, why I would go for buys. Okay, now if I were to look at this daily chart, right? I always do this. This is what I do for every single pair. I don't care what pair it is. I do this always. I go to my candlesticks and I go down to line. Okay, remember I'm on the daily chart. I don't care H4, H1, no. Daily chart, weekly chart, monthly. Okay, so I go to my daily. What do I see here? I see bearish structure gets broken. Same thing here. Okay. Now, what did I tell you? Pay attention to the most recent structure that's been broken, right? So let's not care about all of this. I'm looking at this chart now. I see this bearish structure get broken, right? So what am I waiting for? I'm waiting for a pullback, some bullish order block here for me to buy. Okay, let's test this. Let's test this, okay? We go to the candlestick. Do you see this? Right? Now, what classifies a break of structure? I want to see a candle's body close above, right? Automatically, I'm like, okay, I'm waiting for, I'm not going to buy straight away, of course. I want to wait for a pullback into a bullish order block for me to buy. Okay, fantastic. So what am I going to do? So I see this break of structure daily. I'm like, okay, I head down to the H4 and look, all I'm marking out are these bullish order blocks. One here. I see this. Look at this. There's not an engulfing or anything, but it's just a normal bullish order block. That's it. That's it. That's all I'm doing. Okay. Now, when price comes back inside this area, I want to look for a buy. I can look for a buy either through M1, M5 bullish engulfing candlestick confirmation like a retail trader, which is fine, or I can look for my bullish QM. Okay. So I think we should look for a bullish QM. I hope TradingView prints this, man. Okay, it does. Beautiful. So if I were to look here, me personally, I can't see anything because look, the first entry inside never gets stop hunted again. There's never been another stop hunt here. Okay, because what I want to see is this first entry and then the next low coming in to sweep this, show my sign of strength, and then I want to get RTO. I don't get that. But what do I get here? Let's see. I get this lower low. I want to see this get broken, right? This is my structure now. Guess what happens next? So look, I'm seeing this, okay? My SH is done. Stop hunt is done. What do I want to see next? The structure that created my stop hunt, I want to see that broken, right? It doesn't. Price comes up and it fails. Now, I just want to show you how this looks like on the line chart, right? Price comes up. I want to see there's some structure up here, if you will, even this one. I want to see this get broken, but it doesn't. Price comes up and it fails. So what do? I want to look for my second type of QM, okay? And what's the second type of QM? I want to see this structure now get broken. Why this structure? Because if I go down to M1, you can see this shift of market structure. Okay. And I want to see this now get a candle go right through. But look, nothing happens. Nothing happens, right? So now where's my attention now? I see this next structure coming down and it's creating another QM here, another shift of market structure. So now this is invalid. I'm paying attention to this now. So when I'm paying attention to this, look, none of them came up to break this high. So I'm paying attention to the bearish structure that created this low. What's the bearish structure? Look, price came up, reversed, came back down, reversed. Now what am I looking for? I'm looking for a candle body to break above this. I get that. Now what am I marking? Let me see. What am I marking? I'm marking the last down candle before the break of structure. Okay, look, last down candle before the break of structure. Understand something else. Where am I keeping my stop loss? Obviously below the stop hunt, right? So this is your stop hunt. Why is this your stop hunt? Because you stop hunted these lows. This was the lowest low that price could possibly go to. Okay, in this case, bam, you get stopped out. Happens. I want to show you guys the examples of where price just does not follow what you want it to follow. Okay, this is a clear example. So you would have gotten stopped out. You would have lost 10 pips. You would have lost 10 pips out of that. Happens, bro. That's life. Now let's move on to the setups which do actually work. So let's say you lost 10 pips. You're feeling like shit. Okay, let's move on to the setups that do work. So I'm still playing off of this 4-hour bullish order block, right? As you can see, this just because it's been tested once does not mean it's not going to be tested again, because as you can see, price bulled right from it. So if I were to take a look at price action here where it did work, okay, why would I want to look for a buy here? Let me answer that question. Why would I want to look for a buy here? Number one, I have my H4 bullish OB here. That's number one. Number two, price came in. This is what Patio was referring to just now. All of that liquidity residing here, 1, 2, 3, and in fact, 4 over here as well. It comes in to sweep all of that. It comes in to sweep all of that liquidity, and it flies in the right direction, because you have to understand what's the higher time frame trend. The higher time frame trend on daily, we already found that out. It's bullish. Okay, done. Cool. So now that we know the higher time frame trend is bullish on daily, what am I doing here? I'm looking for either a bullish order block in the form of, just a last down candle before the move up, or I'm looking for a bullish engulfing candlestick, because that's the easiest for me to see. So I'm going on the 4-hour, for example, and I can't see anything interesting here. I can't see a 4-hour bullish, order block, a 4-hour bullish engulfing, anything. I could mark this, but I have to understand that the wick is all the way below here. So I have to think, what's my risk going to be? Okay, I decide I'm going to keep this 4-hour here. All right. Next, I'm going to go down to the 1-hour. Can I see anything interesting on the 1-hour? Guess what I see? I see a bullish engulfing candlestick. Why is this a bullish engulfing candlestick? Because you see a bearish candle here, right? The next candlestick has the close, right? Which is a bullish candlestick, has the close above this candle here. See, it's a body close. It's not a wick. It's a body close, just like this one. See this bearish candlestick here? Price flies up. It closes above the next candle. So what I did here in this instance, I got rid of my 4-hour zone. I went to the 1-hour and I just drew this. This on the 1-hour, by the way. So I drew this because I knew that, number one, this is a bullish QM. Why is it a bullish QM? Remember what I kept talking about in the chat. Every single engulfing, either bullish or bearish, is a QM. If it's a bullish engulfing, it's a bullish QM. Bearish engulfing, bearish QM. Simple as that. All right. So when I see this, number one, when I look at it on the 1-hour, instantly I can see this. Stop hunt. Oops, my bad. Stop hunt right here. And I see structure here. And we get a break. Instantly. Look, it's a QM already. So what am I waiting for? I'm waiting for the last bearish candle that caused this break of structure, right? And price trades inside it. But I'm not one to trade gold, especially on the 1-hour. Okay, cool. So you want to have much less risk. No worries. Let me show you something. So we have this on the 1-hour, bullish engulfing. Okay, we've already found that out. Higher time frame trend, daily is bullish. Fantastic. I head down to the 30 minutes. I want to see, can I refine anything? Okay, I head down to the 30 minutes. I see, nope, this is still the last bearish candle. Okay, no worries. I'm going to go down to the 15 minutes. Can I see anything interesting? Okay, I do see something interesting. I see a bullish engulfing candlestick on the M15. What am I going to do? I'm going to draw that. Remember, I'm just drawing the last bearish candlestick, okay? And now I know that, okay, number one, price is not going to 100% play from this. It can even trade lower. And I also know that when I draw this zone, it's just so that if price comes inside here, I know my risk is so small. It doesn't mean price is going to play. Again, I want to show you guys the realistic examples. Sometimes your QM is not going to actually go in the direction, okay? So I've marked this out on 15 minutes in case I get price come inside, I know that this is very little risk that I'm playing around with, okay? But I also do know that with an order block, as long as I see my QM pattern, okay, and it works with my risk plan, I'm happy, I'm good, I'm in, okay? So in this case, price decided to play off of the M30 or even if you wanted to the 1 hour bullish order block. How can you enter? How can you enter? Okay, let me show. So first of all, price came inside your bullish OB on the M30. Okay, whether or not price comes inside your M15 zone here, that's none of your concern because all you're looking for is for your bullish QM. Okay, let's see. Price comes in, makes a low, right? And this low gets stop hunted. When this low gets stop hunted, what are you paying attention to? You're paying attention to this structure, right? Why? Because this is the structure that created this stop hunt here. Okay, so you want to see this have a break. Price never comes up there. Okay, now you're focusing here. Could this possibly get stop hunted? It gets stop hunted. So now what are you focusing on? You're focusing on low here, this low, and you're focusing on this low. Now, which structure do I want to see price break? I want to see price break this structure. Nope, doesn't happen. So now I'm thinking price can either break it in the future here, a couple more 5 minutes, it could break it, or this low is going to get stop hunted. Now pay attention to this low. This low gets, oh man, this low gets stop hunted. Right here. See this candle here? Stop hunts this low. You have to understand, you have not even entered a single trade yet. You've not even placed anything. All you're watching for is number one, a stop hunt. Number two, a break of the structure that created the stop hunt. So now think, what's the structure that created this stop hunt here? See the stop hunt? What's the structure that created it? Price went up, reversed, came down, reversed, came up, reversed, came down, reversed, went up, reversed, came down to stop hunt, reversed up again. So what's the structure that created the stop hunt? This one right here. So now you want to see a candle body close above. Do you see a candle body close above? Again, you've not even entered anything yet. Do you see a candle body close above? Yes, you do. Now, what's your mind telling you to do? I have, number one, I have my stop hunt. Beautiful. Number two, I have the structure that created the stop hunt. It has a break of structure. What does that mean? That means price is proving to you it's strong. Does it mean that price is 100% going to go up? Hell no, nothing's 100%. But it means that you have another confluence to buy the market. Okay, number two is your structure is broken. Number three, what are you waiting for? You are waiting for the last down candle. Get this in your head because this is a bullish example. The last down candle before it caused this break of structure. Beautiful. Simple as that. What's the last down candle? Price trades up. It creates a down candle. But price doesn't break structure after this down candle. Price makes another down candle and then breaks structure right after it. Beautiful. So simple as that. I'm going to mark this. I mean, you tell me if that's beautiful or not. You're entering right here with your stop loss where, okay, it's beautiful, cool. Where are you freaking placing your stop loss? I'm placing my stop loss, simple. Your rules are simple. Below the bullish QM stop hunt. Simple. Where is the stop hunt in this bullish QM? This one right here. So I'm placing my stop loss here. Of course, I'm going to have my spread to calculate inside, right? So I'm going to have to maybe 2 pips, 3 pips, whatever your broker's spread is. But I have entered here. I'm keeping my stop loss in a safe area below this stop hunt, and that's it. I'm done. I'm in this market. I'm buying the market, and that's it. As you can see, it travels up. Now you have to think, how much am I risking with this trade? Okay, so first of all, it's not even how much you're getting. It's how much are you risking with this trade. Let's go. So I'm risking 14.9 pips, so 15 pips. Let's just say 15 pips. With your spread, whatever the heck, let's say 20 pips you're risking. Beautiful, 20 pips you're risking. Oh man, that's quite a lot. For Gold, bro, 20 pips is nothing. Okay, now let's see how far gold went up, and then I'll tell you guys where I would have taken my profits at. I'll answer your question in a bit. Yeah, let's see where gold, holy fuck, shut up, bro. Let's see where gold goes up to, and then I'll calculate the where I would have taken my profits at. Okay, so if I wanted to go here, gold went up 448 pips from your entry, and you only risked 20 pips. Now, first of all, could you have actually gotten this 448 pips? Abso-freaking-lutely. And let me explain why. Because you know the order flow on the higher time frame. What's the order flow on the higher time frame? It's bullish. Why? Daily structure told you so. Number two, okay, you could have taken your very handsome profits right here. Let me show you. So where would I have taken my profits, right? Now, I would have taken my profits. You see all of this. In fact, it's easier if I go to the 4 hour. Okay. You see price has just been consolidating here, right? I just want to know the high of the range. Why do I only want to know the high of the range? Why not the low of the range, right? I want to know the high of the range for one reason and one reason only, because I'm bullish. So if I know the high of the range and I'm in a bullish market setup, right? I'm in bullish market structure. I want to target that high. So let's take a look. I want to target the high of the entire range. Why is this the high of the entire range? There's no other high. So the market would have been like this, right? There's no other high that trades higher than this. So all that liquidity, all those people who somehow, for whatever reason, wanted to sell over here, guess where the liquidity is going to be? Right at or right above this stop loss. Where are all the buyers going to put their buy stops at? Above this area. Simple as that. So that's where I'm going to target. So what would your profit have been over here, which is 100% achievable? This would have been a beautiful 210-ish pips of profit. You're done. You're out of the market. And you have to think, how much did you risk? You risked only 20 pips. Okay, let me go to your chat real quick. Mad Gold, 20 pips. Yeah, the thing is, I showed you the examples of where it could have failed. Okay, way down over here. It could have failed, and it did fail. And then I also showed you the, this is when Fern is getting mad at you. Bro. And I also showed you the examples where price just, you know, what if price doesn't go for your structure straight away? Then you have to look for that little, you know, that little SMS variation. You gotta work with the markets. The markets are not gonna give you that beautiful QM all the time. If it does, beautiful. If it doesn't, too bad, bro. So yeah, gold, 20 pips stop loss on gold with over a 200 pip reward. And this is very realistic. I mean, you wouldn't have known that the market would have gone up here probably, but I know that if we're bullish, someday in the future, we're gonna hit up to these highs. Why? Because we're bullish. Imagine you held it. Yeah, man. Imagine if I had a buy right here. I didn't buy this. I'll be 100% honest with you guys, but I can show you proof and screenshots of other people that I thought. This guy's called Afik Zafi on Instagram. Other people that I thought, he took this freaking trade, bro. And he's holding it right now as we speak. He's still freaking holding it. So I called this trader. I sent him the analysis. He agreed with my analysis. Sad thing is he took the trade. I freaking didn't. So be it, man. I'll send you guys a screenshot of it too if you guys don't believe me. But anyway, where did I get in this market? Now, this is the trade that I actually took. Okay. So, buddy, what you saying? Imagine you held a Hilori. I should go kill myself. Yeah, man. Okay. So where did I buy the market? Number one, why am I not looking for sells in this bearish engulfing? Well, sure, there could be some short-term retracements. 100%. I'm not saying there aren't going to be short-term retracements. Let me just check. Are people even here? Okay, awesome. Because you guys are awfully quiet. But what I want to know is the higher time frame objective. What's the higher time frame agenda, if you will? We're trading higher. We're creating higher highs, higher lows every single time. So if we're bulling all the way from here, don't you think there's going to be some consolidation, some accumulation? Those who know Wyckoff, I'm sure you guys would have absolutely ate off of this setup, right? So, man said bullying. Who said bullying? Yeah, bullying, bro. What do you mean? Price bulls, right? Okay, so yeah, what am I paying attention to now? This is the thing about engulfings, right? When I see a bearish engulfing in bullish structure, guess what I'm thinking in my head? I'm automatically right. I'm not going to sell there. Why am I not going to sell there? Number one, because we're in bullish structure. Okay, so that's you know, we've ensured that. What I'm paying attention to truly is for a break of that structure. Right? So it's for a break and for a disrespect of that bearish engulfing candlestick. Can you see this bearish engulfing right here? Don't tell me you guys can't see this bearish engulfing. This is like a retail perfect bearish engulfing candlestick right here. All I'm waiting for, and I only have 10 minutes left, by the way, so I'll start a new session. All I'm waiting for is for a candle to trade higher and have a body close above it. Do I have a body close above it? I'm not doing anything here. Maybe there's another buy opportunity, whatever, but really, I'm not doing anything. I'm paying attention to this body close above. Beautiful. What am I looking at next? I'm looking for price to trade where though? Okay, let's go back to the H4. What am I looking for price to do? Can you see this last bearish candlestick? It's the same old thing. Can you see this last bearish candlestick before the break of structure? I'm looking for price to trade inside that. So what am I going to do now? Okay, we got this break of structure or disrespect of the bearish engulfing. Beautiful. I'm going to hit down here. Mark out this last bearish candle before the push up. Done. No. Now I'm going to hit down to the 1 hour. Okay, 1 hour. And this is where I personally entered the trade. On the 1 hour time frame, I saw this, right? This was the candle that broke out. So this was on the H4. This is what broke out of the bearish engulfing over here. And guess what it created? Just so conveniently, guess what it created? A bullish engulfing candlestick. And remember what I told you about engulfings too. Again, I want to keep on getting this through to you guys' heads. Engulfing candlesticks are 100% all the time going to be QMs. Okay, just depends on what type of engulfing they are. My analysis snaps. Thank you, bro. Thank you so much. I hope you guys can learn from this too. And I hope I can learn from some of you guys who are 10 times better than me as well. So again, this was the zone that was drawn on the H4. Why was the zone drawn on the H4? Let me explain. I'll start a new Zoom, guys. 8 minutes left. Because of this last bearish candlestick before the disrespect of the bearish engulfing. Hitting down to the 1 hour. What do I see here? Okay, I can refine my zone. This is all about discretion. I told you guys this in session 1 and session 2. I can't tell you, draw your zone here, leave it here, that's it, 100%, you're done. No, if I see a bullish engulfing here, guess what I'm going to do? I'm going to make do with the market. I'm going to move my little zone here, okay? And all I'm looking for is for price to trade inside here and give me and do one of 3 things. I'm looking for price to do a bullish QM inside here on a lower time frame, say M5, M15, M1, whatever the heck you're comfortable with. Second option is for price to hit inside here and do a little M1 bullish engulfing candlestick confirmation or M5 bullish engulfing candlestick confirmation, and then I'd enter. That's a little bit of retail. It's a little bit more risky, but it still works because you're using the premise of the fact that a QM is 100% equivalent to an engulfing candlestick. So what am I looking for here? Either one of those 3 setups. Now let's see. Oh man, what happened over here? I'm looking at this. This was my H1 bullish engulfing happened somewhere in here. Somewhere in here, the H1 bullish engulfing happened. Now, this is what I'm paying attention to personally, okay? I'm seeing price create this low, create a lower low. I don't care about all of this liquidity. No, I'm looking at what's happening right now. See this low? I see this other low, which is a stop hunt. And it disrespected the H4 bearish engulfing. Now this had already happened. So you have to understand, I have not traded this yet. This had already happened. Price is sort of up here. Sort of just up here. Let's be real with this, okay? So price breaks out of this structure up here. Can you see the structure? This structure here. In fact, I should not even be telling you guys to look at this structure. Look at what's recent. See this structure? Think about it. What was the last bearish candlestick before the break of this structure now? Think about it. It's this bearish candlestick, right? Forget the fact it's an engulfing and all of that stuff. It's the last bearish candlestick, right? So guess what I'm going to do? I'm going to have my buy in right here. All right. Now, this is up to you and up to your risk. You could have your buy in down here. You could have your buy in up here. That's up to you. Because if I have a buy up here, I'm having my stop loss where? Below these lows. Why am I having my stop loss below these lows as opposed to these? Understand. This is the last low. It mitigated all of these on the M1, right? On the M1, it mitigated all of these lows. You see this wick, boom. Takes out all of that. This was the last low before my break of structure. That means that the last point of liquidity is down here. Okay, so was I playing it risky? I personally don't think so because I had all my confirmations just sink in together so beautifully, right? And now, again, just to illustrate, just to show you guys, this is a QM. This is 100% AQM. Okay, get your break of structure. Your RTO is down. Oops, your RTO is up here. Fuck me, man. I'm a boomer, bro. Okay, your RTO is right up here. I'm buying stop loss below this mitigation. Can it go lower than this? 100% it can go lower than this. But that's the risk that I was willing to take. Okay, so I had my buy-in right here. I had my stop loss below. How many pips? I think mine was about 30 pips stop loss, I believe. I'm not sure. It was about 30. Okay, no way. I could have sworn I had a bigger stop loss. I don't know. I could have sworn my stop loss was about 20 pips. But 13 pips stop loss, okay, even better. Oh yeah, it was about 20 pips stop loss because my broker is freaking 3 pips spreads for gold. Okay, beautiful. So I'm having my Entry right up here, 13 pips stop loss right below these lows. Okay, I'm buying the market up. Okay, so I'm buying over here. I'm seeing price trade lower and stuff like that. I'm not pressed. My stop loss is all the way down here. Plus, I know all of those confirmations just coming together. What are those confirmations that I'm talking about? I'm talking about the bearish engulfing candlestick failing. What does that mean? That means, okay, if you want me to put this in retail terms, that means resistance turning into support. Simple as that. That's the easiest way I could say it. Number two, I'm having this H4 bullish engulfing candlestick. Beautiful. So that's two pieces of supply of buyers. That's two pieces of evidence that I want to see price trade higher. Okay. Let me answer this first. My spread on gold is 5. Bro, 3 pip spread is okay, man. Okay. Wait, your spread on gold is 5, meaning 0.5 pips. Okay, well, good for you, bro. I don't know. Pepperstone's fine with me, man. But so going back to this, right? H4 bearish engulfing failed. H4 bullish order block. 2 pieces of supply evidence. Beautiful. What else do I see? 3 pieces of supply evidence, which is a bullish engulfing candlestick on the H1. Beautiful. I'm waiting for a pullback. That's it. Because you have to understand, where are the majority of the stops going to be? Below this candle, right? Why? Because people who wanted to buy right here, they got taken out. So the next level of stops is right here down at this wick. I'm not going to have my stop loss that low. So I'm looking for a lower time frame QM to play off of, and that's exactly what I got. Okay, and I just took my profits right up here. So I risked about, okay, it said 13, but I'm going to be real with you guys, about 20 pips I risked on that one. And so I'm taking the buy all the way up to these highs. Remember the daily highs I was talking about earlier? And bam, 73. I can show you this trade. I got 73 freaking pips out of this trade. This trade happened. It was beautiful and it worked. Now I'm going to start a new Zoom because there's 2 minutes left. There's no point in me explaining and rushing you guys. I'm going to start a new Zoom, send it over to the chat, and you guys can find the explanation over there. So I'll see you guys in a bit.